Welcome back to the channel. Today, we're diving into one of the most important topics for anyone looking to grow their wealth: how to make money with investments. It doesn't matter if you're starting with a few $100s or already have a comfortable nest egg, understanding how to make your money work for you is crucial for building long-term financial success. We'll be breaking down some of the most effective investment strategies out there, from the stock market to real estate and beyond. Remember, this isn't about getting rich quick schemes, it's about making smart, informed decisions with your money to achieve your financial goals. Whether you're dreaming of early retirement, financial freedom, or just want to make sure your money is working as hard as you are, this video is for you. So let's get started. First up, let's talk about the stock market. Now, I know what you might be thinking, the stock market, isn't that risky? And yeah, there's definitely risk involved, but there's also massive potential for growth. Think of it like this: when you buy a stock, you're essentially buying a small piece of ownership in a company. As that company grows and becomes more profitable, the value of your shares goes up too. That's how people make money in the stock market, through capital appreciation. Of course, the stock market can be volatile. Individual stock prices go up and down, sometimes even drastically in the short term. But over the long term, the stock market has historically trended upwards. That's why it's so important to diversify your portfolio. Don't put all your eggs in one basket. Instead, spread your investments across different companies, industries, and even asset classes. A well-diversified portfolio helps to mitigate risk. If one investment isn't performing well, others can help to balance things out. Remember, investing in the stock market is a marathon, not a sprint. It's about making smart, long-term decisions with your money. Now, let's move on to another powerful investment vehicle: real estate. Unlike stocks, which can feel a bit abstract, real estate is tangible. You're investing in something you can see and touch, which for a lot of people, makes it a more comfortable investment. One of the biggest advantages of real estate investing is the potential for both passive income and long-term appreciation. When you own rental properties, you're collecting rent checks every month, creating a steady stream of passive income. And as rents increase over time, your cash flow grows too. On top of that, the value of your property itself can appreciate significantly over the long term. It's like having your money work for you 24/7, 365 days a year. Of course, real estate investing isn't entirely passive. It requires research, due diligence, and sometimes even dealing with tenants. But for those willing to put in the work, the potential rewards can be substantial. Plus, there are tons of different ways to invest in real estate, from buying rental properties to flipping houses to investing in REITs, real estate investment trusts. So, you can find a strategy that aligns with your risk tolerance, investment goals, and available capital. Let's shift gears now and talk about bonds. While stocks and real estate offer the potential for higher returns, they also come with higher risk. Bonds, on the other hand, are generally considered a safer investment option, especially for those who are more risk-averse. Essentially, when you buy a bond, you're loaning money to a government or corporation. In return, they agree to pay you back the principal amount plus interest over a set period of time. Bonds typically offer lower returns than stocks, but they also tend to be less volatile. This makes them a good option for investors who are looking for a steady stream of income or who are nearing retirement and want to preserve their capital. Now, within the world of bonds, you've got different types like government bonds, corporate bonds, and municipal bonds. Each has its own risk and return profile, so it's essential to do your research and understand what you're investing in. But overall, bonds can be a valuable addition to a diversified portfolio, providing a cushion against market volatility and offering a predictable stream of income. Now, let's say you're new to investing, or maybe you don't have the time or desire to research individual stocks and bonds. That's where mutual funds come in. Mutual funds are like baskets of investments. They pool money from multiple investors to purchase a diversified portfolio of stocks, bonds, or other assets. The cool thing about mutual funds is that they're managed by professional portfolio managers. These managers use their expertise to select investments and try to achieve the fund's investment objectives. This takes a lot of the guesswork out of investing, especially for beginners. Plus, because mutual funds invest in a variety of assets, they offer built-in diversification. This helps to reduce risk compared to investing in just a handful of individual stocks or bonds. Of course, mutual funds do come with fees, so it's essential to compare expense ratios before investing. but overall, they can be an excellent option for investors who want a professionally managed, diversified portfolio without having to do all the heavy lifting themselves. Finally, let's talk about ETFs or exchange-traded funds. ETFs are similar to mutual funds in that they also offer a basket of investments in a single tradable security. However, ETFs are traded on stock exchanges, just like individual stocks. This means you can buy and sell them throughout the trading day, giving you more flexibility than traditional mutual funds. Plus, ETFs tend to have lower expense ratios than mutual funds, making them a more cost-effective option for many investors. Another advantage of ETFs is their transparency. You can see exactly what holdings are in an ETF's portfolio at any given time. This level of transparency is not always available with mutual funds. ETFs also come in a wide variety of flavors, tracking everything from broad market indices like the S&P 500 to specific sectors like technology or healthcare. This allows you to tailor your investments to your specific interests and investment goals. Whether you're a seasoned investor or just starting out, ETFs offer a flexible, low-cost way to gain exposure to a wide range of asset classes and investment strategies. Thanks for watching. If you found this video helpful, make sure to hit the like button and subscribe for more tips on growing your wealth. See you in the next video. Remember, investing is the key to building lasting wealth and achieving your financial dreams. Whether you're starting small or have a significant amount to invest, there's an investment strategy out there for you. The most important thing is to start today. The sooner you begin investing, the more time your money has to grow and compound. So take what you've learned in this video, do your research, and start putting your money to work for you.